Let's welcome on board Sumant Kathpalia. He's the MD and CEO at IndusInd Bank, joining in on the show right now. Sumant, great to have you today on ET Now. And firstly, here's a very happy Diwali to you and everyone at IndusInd Bank, and of course your shareholders as well from all of us.
Thanks so much. Wish you all at ET a very, very happy Diwali from our side.
And it is turning out to be a happy Diwali for you, isn't it? I mean, you're looking to drive retailization at the bank. Wanted to understand what is the customer strategy for retail and mortgage, and what kind of customers are you looking at now?
We're very segmented in our strategy. And so we look at segments in two ways. We look at geographical segmentation, and we look at client segmentation. So in you look at geographies, I think we are very big in the rural sector. So we have about half of our customer base in the rural sector, where we offer microfinance as well as personal loans and vehicle finance products. And then we are very, very strong now in the NRI segment, the affluent segment, and now in the near mass affluent segment, where we are doing very well. So I think a very segmented strategy on the client base. If you go into geography, I think we are in rural, as well as we've got 19 markets where we have a very big share of the wallet of the client, where we are very big.
Mr. Kathpalia, good morning. Nikunj
morning,
also joining in. Happy Diwali once again. Sir, thoda capture karte hain Diwali. Smile karo. Punjabi tadka should be there in your voice. That Punjabi tadka is missing today. Mr. Kathpalia, if I look at your numbers, in absolute terms, good growth. 18% is a respectable growth. But if I look at your balance sheet size and compare your balance sheet size, let's say with an HDFC Bank, their growth rate on a balance sheet which is larger than that of IndusInd Bank, they are growing at 25%. Are you conservative here?
Not Nikunj. I think we are balancing our growth as we grow. So I think what we need to do is we have to see what is the risk-weighted assets which we can pick up on our balance sheet. So I think it's a balanced growth, and what we've seen over a period of time now, our risk-weighted assets have come down, and I believe that we can grow at 22% from here for the second half, and in the lines of businesses which we are in, which is vehicle, microfinance. I think the second half is better than the first half, and you've always seen momentum picking up in the second half. So you will see us doing 22% growth. And I think you should only expect a 20 to 25% CAGR growth from us from here on.
So can I say that 20% will at least be the new normal? It may not be 25, but 20% growth will be the new normal for IndusInd Bank for next 2, 3, 4 years?
Yes, I think 20. See, you have to look at, very differently. I think in 3 domains where we are market leaders, we've always increased or maintained our market share, which is diamond, vehicle finance and microfinance. We will always maintain our market share or grow our market share. So it depends on how the industry is going there. And we believe vehicle will grow at about 28 to 30. So we will continue to grow at that pace in the disbursements, at least at that level. On the microfinance, I think there is a little bit of a lull period which is coming. Second half is better, and we'll go at 25 to 30% in that industry also. And diamond is growing at 24% year on year. You've seen the growth. I think in the corporate side, it grows at the rate at which the market grows. Let's say the market is growing at 15%. We may grow at 18% on that because we come from a small base. The SME and the MSME piece, I think we're growing at 28 to 30. So overall, we should assume a 20% growth for us, and at least a 20% growth from here on.
Just taking a leaf from what you were earlier talking about, Samantha, retailization and the kind of focus that you have. I'm just looking at the performance of the quarter gone by. And while your corporate yields have risen, retail yields are not up. Are they expected to rise? Could you give us a timeline on that?
See the increase in the yields going forward. I think one thing which you would have seen, and I would have observed the data, our microfinance did not grow. And that's why the yield became stable. The yields on the vehicle finance as well as the non-vehicle finance did grow. So the microfinance book remains static. And I think that's where the yields will start coming up. And I think as the book grows and the balance of the book shifts towards a little bit towards microfinance, I think you will see the yields going up. We are seeing disbursement yields going up in vehicle finance. We are seeing disbursement yield going up in the non-vehicle finance, and we are seeing a good yield up in the microfinance business. So I think you should start seeing from next quarter the yield build up happening in the retail side of the business also.
Retail yields are expected to rise, then your NIMs as well are going to move up. And maybe they should go above the current mark of 4.24%. You had guided, I remember, as 4.25 as the upper end. Or would you say that that could be offset by higher cost of deposits?
I've always said that you should be range bound in your yields. I think if you want to create a right risk weighted asset book, I think you should be between 4.15 to 4.25. And I think I'll be comfortable because we balance the book with A rated paper and above, where I think the yields are not very high. And I think, but it's important to balance the book. And we are a universal bank, and a universal bank will always have a yields around 4.15 to 4.25.
If I look at the big picture for the banking sector, right now credit growth is growing higher than the deposit growth. Credit growth is strong. If you are talking about 20% growth, that means somewhere the system will grow at least at 15%. Now, if deposits are lagging the credit growth, what are the chances that deposit rates will go up? They could go up suddenly, and that could start having impact on your NIMs.
When we give you numbers, we've always taken care of the growth. We've already built in 50 basis points increase in the cost of deposits as we move along. And that's where, we are giving the numbers of the guidance which we are passing. There will be an increase in cost of deposits. You've seen in last 2 quarters, we increased the last quarter by about 30 basis points. We think that this quarter itself, you'll see a 25 to 30 basis point increase because we have bulk deposits that gets repriced. About 28% of our book gets repriced on the bulk deposits regularly. And I think, so we have taken that into account. But please remember the asset side of our business. We have a 14.95% yield coming on our retail business. And I think that's only going up. So I think we have a very, very good runway on our yields. And I think if we change our mix, this quarter, we ran with a 53-47 mix, which is 53% retail and 47 corporate. As if we go to 55-45 or 58-42, you will see that the mix changes because the retail yields are at least 600 basis points higher than the corporate yields.
Since we're talking about the liability side, the CASA, define for us that what is the strategy in place for the SA and for the CA. We always tend to focus on CASA, but break the CASA for our viewers.
On savings account, we have a 5-pronged strategy. I talked about segmentation, which is the home markets as well as the client segmentation. So I think that is giving us a different look and feel altogether. We also now are extending that segmentation into what we call as community banking. So we believe that a bank of our size in nature, if you have got to make an impact, you got to do something different. And we believe communities of very different nature and capturing communities will give us the growth. We were looking at the South-based banks and how communities have helped them. I think in India, there are very different communities. And even if you capture 3 or 4 of those communities over the 2 years, I think your SA can actually grow at 20 to 25% CAGR without any difficulty, in my opinion. And I think that's a very, very important parameter so that's the first strategy. Second, I continue to believe that the expansion in the branches is a given. I don't think you should stop expanding your branches. We want to go to 3,500 branches in 3 years. We'll end this year at 2,500 branches. Each branch gives you a CASA of 150 to 200 crores over a period of 5 to 7 years. And I think that's a wonderful growth which you see in CASA. And I think that's a very, very important parameter for banks. India will never be completely digital, though the clients may not walk in. I think there should still be a physical presence for the client to be comfortable dealing with the bank. The third, I think, is expanding our Bharat Financial Network. I believe that the Bharat Financial Network is a very vibrant network. We have 1,800 outlets and we've added 600 more outlets on the BSS network. I believe that uh, we are at 1,600 crores. I think we have a huge client base. Yes, the client base may not give you so much of floats, but I think it can go up to 5,000 crores the way we are seeing it. And as we grow our business, I believe that in the next 1 year, this business will be 5,000 crores from 1,600 crores. So that's third. The fourth is we're launching a digital pack for our individual segment in January. I think that that pack will redefine how individual client experience is done, and client products come as a consequence of the client experience. You've seen nano banks, you've seen this, but it's from a bank when it comes in, it's much more stronger. We believe that we should be able to garner 2 million clients in the first 1 to 2 years of operation, creating a 20,000 crore of balance sheet as a consequence. So I think we've got all our vectors right as we move in. On the current account side, I think we focus on transaction banking products, we focus on trade FX, and we focus on escrows as a very big business. So I think if you look at our transaction banking products, I think our penetration into our asset clients in the SME, MSME, as well as the corporate is almost 78%. And that is where our floats are coming in the current account side, including dividend mandates, which you saw last year. The second is, I think the escrows. Yeah.
No.
Escrows.
Yes, please.
Escrows are very, very, very important as a business, and we are seeing a very good escrow lineup, specifically on the RERA side, because very strong on the real estate side also.
I have just two more follow-up questions, very quick ones. I won't extend my appointment. It's a Diwali day. I know you got to get back to meeting your employees and your staff members today. I hope you'll appreciate the spirit of my question here. In banking industry, for shareholders, the man at the top really matters. What is the update on your renewable as CEO and MD of IndusInd Bank? What is the status on the RBI chitti, if I may use the Hindi word?
The board has recommended it. The chitti has gone to RBI, like you use the Hindi word. The chitti has gone to the RBI. You cannot come to any conclusion till the time RBI reverts back to you.
I know you are joining us from Delhi today. So Kathpalia Saab, how long will you continue this? Delhi, Bombay, Bombay, Delhi. You keep on shifting between cities?
No. I come to Delhi maybe once a month and during festival. That's it. Otherwise, I'm based out of Bombay. My family is there. I live out of Bombay.
Okay. I'll look forward to meet you soon. And once again, a very happy Diwali. And it was a long overdue interview. So take care of yourself at ET Now. It's a Naya Saal, Nayi Shuruaat. So here's wishing a Naya Saal and Nayi Shuruaat for you, your family, and for your shareholders.
Thank you so much, and look forward to seeing you in Bombay.